The Dow Jones and Nasdaq are two of the most widely followed stock market indexes in the world. To understand the difference between them, we first need to know what a stock market index is. A stock market index is a collection of stocks that represent a particular segment of the market. The Dow Jones Industrial Average, also known as the Dow 30, is a stock market index that represents 30 of the largest and most widely traded companies in the United States. The companies that make up the Dow Jones are leaders in their respective industries and are often considered to be a good indicator of the overall health of the U.S. economy. The Dow Jones is a price-weighted index, meaning that the companies with the highest stock price have a greater influence on the index. The Nasdaq Composite Index, on the other hand, is a stock market index that represents all of the companies listed on the Nasdaq Stock Exchange. The Nasdaq is a market capitalization weighted index, meaning that the companies with the largest market capitalization have a greater influence on the index. The Nasdaq is often seen as a tech-heavy index, as it is home to many of the world's largest technology companies, including Apple, Google, and Amazon. One of the main differences between the Dow Jones and the Nasdaq is the number of companies that make up each index. The Dow Jones has only 30 companies, while the Nasdaq has over 3,000. This means that the Nasdaq is a more diverse index, with a wider range of companies and industries represented. The Dow Jones, on the other hand, is more concentrated, with a focus on the largest and most established companies in the U.S. In terms of performance, the Nasdaq has historically outperformed the Dow Jones over the long term. This is because the Nasdaq has a greater exposure to the technology sector, which has been a driving force behind the U.S. economy in recent years. However, the Dow Jones has been more stable and less volatile than the Nasdaq, making it a more attractive option for investors who are looking for a lower risk investment. When it comes to investing in the Dow Jones or the Nasdaq, there are several options available. Investors can buy individual stocks that make up each index, or they can invest in index funds or exchange-traded funds that track the performance of each index. Index funds and ETFs provide a diversified portfolio and can be a low-cost way to invest in the stock market. In conclusion, the Dow Jones and Nasdaq are two different stock market indexes that represent different segments of the U.S. economy. The Dow Jones is a price-weighted index that represents 30 of the largest companies in the U.S., while the Nasdaq is a market capitalization weighted index that represents all of the companies listed on the Nasdaq Stock Exchange. Understanding the differences between these two indexes can help investors make informed decisions about their investment portfolios.